Good morning, good afternoon, good evening. So today's episode reaching out about the 2007 financial crisis and things that you could have learned from that. And there's an old saying that wise people learn from others' mistakes, but smart people learn from theirs. So if you didn't buy a home then, you could learn from the others. If you did buy a home then, please learn from that mistake. So the first lesson as a home seller from the 2007 financial crisis is don't buy a home that you can't afford. If you feel that you've been pre-approved for a higher number and that payment in there is really kind of stretching you, that might be a home that you can't afford. So really look at your budgeting and look at, things in life do happen even though the pre-approval may say, hey, here's your number, and you say, hey, we can do that. But remember, you still want to be able to go on vacation. Sometimes the muffler on the car goes. So you want to be able to have a little bit of reserves in there in case those things happen. Now, the second thing is that your home will not always go up in value. So as a listing agent here, I've been in the business for 15 years, and what I'm starting to see over the last year or so is that people will say, hey, I'm going to put off listing my home now. I do want to sell, but I'm going to wait another year for the value to go up. If you're looking to sell, timing the market absolutely perfectly is a tough thing to do. Traders across the world, whether it's a stock market, commodities, what have you, it's very tough to time the absolute top. So you may want to sell when the time is right for you, not necessarily when you think you'll get the highest amount. All right. The next is kind of dovetailing. Your third is dovetailing into the first. Make sure that you have adequate reserves. So you don't want to put all of your money down as a down payment. You don't want to buy a house and then do a bunch of remodeling to it and bring your reserves down. You want to have money always in savings for that rainy day, if you will. And that rainy day meant, hey, we really need to go on a vacation and take the kids out and de-stress. Or it might be the muffler on the car, or the air conditioning unit goes. There's any number of things that, in life, as Murphy's Law says, can happen, will happen, all right? Our number 4 is make sure that you have a big down payment, okay? It's a really good idea. If you can put a larger down payment down, do that. Chew up some of that money, because when you get a loan, I won't go too much into amortization, but on a 30-year loan, the first few years are basically you're paying interest on the loan. And that's the banker's way of making their money. Loans are front-ended with the interest on the front end, and you start paying off the principal in the end. Most people only stay in their houses for around 7 years, and that's right around the time period where you first start chewing into the equity, okay? And number 5, the really big one here, again, these all kind of dovetail into one another, is buy low, sell high. Buy low, sell high. Remember Rodney Dangerfield? Buy. Well, they're all buying. Sell. So you want to buy low and sell high. We've been in a very long recovery here, which really started in 2010. That was pretty much the bottom of the market. 2008, Lehman Brothers went down. Foreclosures and short sales really hit the market. There was fear, and it drove prices in some areas down by 60%, 70% in Port St. Lucie off of the high. So that was a great time to buy in 2010. Now they always say hindsight is 20/20. In retrospect, we look back and say, wow, I should have known to buy then, but there was just fear rampant in the market. So that was a good time to buy. And conversely with that, on the other side is that we've been 7 years into this recovery, and highs, the real estate prices are getting not quite close to what they were in 2006, but they're at some big time highs here. So this would be one of those kind of, you can't time the market, but it is a great time to sell. So if you are thinking about selling, call your realtor and maybe look at what it was in 2010 and say, hey, I've accrued a great profit, even if maybe you bought in 2014. A couple of years have gone by. You can get that money out tax-free if it's your primary residence. So I hope those 5 helped. We always try to bring really good value to you as the consumer, bring energy to this whole thing, and we welcome your comments. We welcome more questions. And anything else that you think that we can do better, please let us know, and we'd love to come over and either help you sell or help you buy with integrity and care. So thank you so much for watching, and we'll see you on the next episode.